Good morning. My name is Dr. Deepika. Today I'll be discussing about a very important concept, that is cash flow analysis. In this topic we will discuss the basic concept of cash flow analysis, what are the main objective of cash flow analysis, and the importance of cash flow analysis, and how we prepare the cash flow statement for the company. Starting with the definition, cash flow statement or statement of cash flow can be defined as cash flow statement exhibit the flow of incoming and outgoing of cash. This statement assesses the ability of the enterprise to generate cash and to utilize the cash. This statement is one of the tools for assessing the liquidity and solvency of the enterprise. The main purpose of cash flow statement is to record how much cash or cash equivalent is entering and leaving the company, or in the other word what we can say, the main purpose of cash flow statement it's it to record how much cash and cash equivalent is coming in and coming out of the company, coming in and going out of the company. So businesses use cash flow statement to get a detailed picture of their cash position, which is essential for financial health of the company. Next, the objective of cash flow statement. The main objective of cash flow statement is to generate cash from operating activity. Next, cash flow statement helps in planning the repayment of loan, schedule and replacement of fixed asset, etc. Cash is the center of all financial decision. It is used as a basis for the projection of future investing and financing plan of the enterprise. Next objective, cash flow statement helps in ascertaining the liquid position of the firm. In the better manner, banks and financial institutions mostly prefer cash flow statement to analyze liquidity of the borrowing firm. Next, cash flow statement helps in efficient and effective management of cash. Next point, the management generally look into the cash flow statement to understand the internally generated cash which is best utilized for payment of dividend. Next objective, cash flow statement based on AS3 revise present separately cash generated and used in operating, investing and financing activity. Next, it is very useful in evaluation of cash position of the firm. So these were some of the objective of cash flow statement. Next is importance of cash flow statement. It is essential to have a sufficient cash. Next, we will discuss the importance of cash flow statement. After objective, next is the importance. It is essential to have a sufficient cash for any business to be successful. Cash plays a very important role. To make any business successful and fruitful, there is a need of sufficient cash in the organization. So, following are some of the importance of cash flow statement. Number one, detailed about outflow. A cash flow statement also helps understand the company's position to make principal payment to its creditor. So it means if the company is having sufficient cash in the organization, it will directly help the company to make proper payment to their creditors. Next is maintaining optimum cash balance. It means cash flow statement helps analyze and also maintain an optimum cash level in hand. It basically helps to determine whether excess cash is lying idle or if there is shortage of cash. It means company, with the help of cash flow statement, company can maintain a proper optimum level of cash balance in the organization. There should not be excess of cash which is idle, which is of no use in the organization. We are not getting any fruitful income out of it, and there should not be shortage of fund in the organization. There should be an optimum level of cash in the organization, which can be achieved with the help of cash flow statement. Next, focuses on generating cash. Profit is the critical factor for the growth of company, and also this comes from generating cash. However, there are several other way to generate cash. Next importance, it helpful for short term planning. A cash flow statement is also helpful for short term planning to meet various obligations. Hence, businesses must always have a sufficient amount of cash to fulfill their upcoming payment. So, cash flow statement helps the businesses to make a proper balance of cash in the organization so that company can meet the present and the future requirement of the organization. Company should not have any shortage of cash. So, these are some of the importance major importance of having a cash flow statement and making a cash flow statement in an organization. Before discussing the element of cash flow statement, I will just discuss about the basic difference between cash flow statement and fund flow statement. So, cash flow is basically a concept based on inflow and outflow of cash for a particular time period, and fund flow is based on changes in working capital and what are the sources and application of fund. So, cash, it is basically calculated from the operation, and fund is also calculated for the operation. Basically, cash flow statement shows the short term position of the business, and fund flow statement shows the long term position of the business. The basic purpose of preparing the cash flow statement is to show the movement of cash during the beginning of the year and what will be the cash at the end of the year. To know this, we prepare cash flow statement, and the main purpose of preparing the fund flow statement is to check the changes in the financial position of the business between previous and current year, what are the sources and application of the fund. So for this we prepare fund flow statement. So the what we get to know in cash flow statement, in cash flow statement the company discloses the inflow and outflow of cash, how much cash is coming into the company and how much cash is going out of the company. And in fund flow statement the company discloses what are the sources of fund of the company and what are the applications of fund of the company. So the major difference between fund flow and cash flow I have already discussed. Next, we come to the different element of cash flow statement. The cash flow statement comprises of these three elements. Number one, cash flow from operating activity. What are the cash inflow and outflow both we receive from operating activity, and cash flow from investing activity and cash flow from financing activity. So firstly we'll start with operating activity. This is the chart. Cash flow activity, inflow of activity, outflow of activity. Inflow of activity means cash is coming into the company, it means cash is increasing. Outflow of activity means cash is going out of the company, it means outflow of activity. Next, classification of cash flow activity. We will classify into three activities: operating activity, investing activity, and third one is financing activity. Firstly, cash flow from operating activity. Number one, the operating activity in the cash flow statement include the main core business activity. It means the main business in which business you are dealing. That activity is known as operating activity. This section basically measures the cash flow from company's provision of product or service. If the company is dealing into product or if the company is dealing into sales, that activity is known as operating activity. Say for example, operating activity include sale of goods and services, salary payment, rent payment, income tax payment. The operating activity of the cash flow statement comprises of various uses and sources of cash from the company's operational activity. In simple word, what I can say is it shows how much money a company has generated from its product or service. Next is cash flow from operating activity. There are some type of activity which we include in operating activity, like cash received from sale of goods or rendering some services. Next, cash received from royalty, fees, commission and other revenue. Next, cash paid to suppliers for goods or services. Next, cash paid to employees on behalf of employees. Next, cash received or paid to insurance company for premium claim annuity. Next, cash paid as income tax or refund of income tax. So these are some of the activities which we include in operating activity. This is the chart operating activity, cash inflow and cash outflow. Cash inflow, what are the things? Cash sales, cash received from debtor, it is cash inflow. Cash received from commissions, fee, royalty and other revenue, that is inflow of cash under operating activity. Next is cash outflow, that is cash purchase, payment to creditors, cash operating expenses, payment of wages and income tax. These are the outflow of cash under operating activity. So this was overall operating activity under cash flow statement. Next is cash flow from investing activity. What do you mean by investing activity? Basically, investing activities include cash flow from acquisition and disposal of long-term asset and other investment not included in cash equivalent. These represent long-term investment in company's growth. So this is the chart investing activity, the cash inflow and cash outflow. So what are the cash inflows under investing activity? That is sale of fixed asset, sale of investment, interest received, dividend received, rent received. So these are cash inflow under investing activity. Next, purchase of fixed asset and purchase of investment. These are outflow of cash under investing activity. Next is financing activity. Financing activity are the activity which result in changes in the size and position of the owner's capital, including preference share capital and borrowing, including debenture of the enterprise from other sources. Financing activity, cash inflow and cash outflow. Uh, Inflow under financing activity is issue of shares in cash, issue of debenture in cash, proceed from long-term borrowing, security premium received, increase in balance of bank, overdraft or cash credit account. See, these are the activities and which comes to cash inflow of the company under financial activity. Next, cash outflow under financing activity are payment of loan, redemption of preference share and debenture, buyback of equity share, payment of dividend, payment of interest, premium paid on redemption of preference share and debenture, decrease in asset of bank overdraft or cash credit account. So these are inflow and outflow of cash under financial activity. So this is the chart. This is the overall performa of preparing cash flow statement. At the top we have written indirect method. We have two method in cash flow statement, direct method and indirect method. Normally we discuss indirect method. Accounting standard 3 revised for the year ended. First column is of particular, second column is of amount. We have three activity. First is cash flow from operating activity. Cash flow from operating activity start with net profit before tax and extraordinary item. After that we need to make some adjustment of non-cash non-operating items like depreciation, losses on sale of fixed asset, increase in provision of doubtful debt. It means these items were first deducted in profit and loss account. Now it will be add back to the net profit. On the other hand, income received, dividend received, rent received, these were the item which were added to calculate net profit. Now this will be less. So opposite entry we need to pass. That's why we call as adjustment of non-cash, non-operating item. And what we receive from operating profit before working capital changes, after that we need to make various adjustment of current asset and current liability, and we need to make the adjustment of income tax paid, and finally we receive net cash or net cash from operating activity or net cash used in operating activity. And next is cash flow from investing activity. In investing activity we include the sale of fixed asset and investment, and purchase of fixed asset and investments, and rent, etc. This is your investing activity. And third comes your financing activity. In financing activity, we include issue of shares, issue of debenture, repayment of loan, etc. This comes under your investing activity. So this is I'll just explain the how to calculate cash flow statement with the help of an example. This is the example. This is the from this example we need to prepare cash flow statement. So net profit, dividend, provision for income tax paid during the year, loss on sale of asset, book value of assets sold, depreciation charged to profit and loss account, profit on sale of investment, value of investment sold, interest income on investment, interest expenses, interest paid during the year, increase in working capital, purchase of fixed asset, investment in joint venture, expenditure on construction work in progress, proceed from long-term borrowing, proceed from short-term borrowing, opening cash and bank balance, closing cash and bank balance. So these are this is your example, and this is the solution. Firstly, cash flow from operating activity. In that, we need to write net profit before tax, and we need to make the adjustment of non-cash, non-operating item. And the amount which we receive is operating profit before working capital changes. In that, we need to make the adjustment of current asset and current liability, and the amount which we receive is cash generated from operation. From that we need to less income tax paid, and finally the amount received is net cash used in operating activity. It means the result it is in negative. We are not getting the cash, we have excess of expenses, outflow of cash under operating activity. Next is cash flow from investing activity. In this we include sale of assets, sale of investment, purchase of fixed asset, everything will include, and the result which we receive is net cash used in investing activity. It means in the second activity also we are getting excess of cash outflow over inflow. Third activity is cash flow from financing activity. In this, we have long term borrowing, short term borrowing, interest paid, dividend paid, and the result which we receive is net cash flow from in financing activity. After that, we need to add all the amount of three activities: operating activity, investing activity, and financial activity. That is what result we will get. That is net decrease in cash and cash equivalent, because the amount it is in negative minus amount. Outflow is more, there is no inflow by adding three activities. And after that we need to add cash and cash equivalent at the beginning of the year. We compare 2 year, what will be the cash in the beginning of the year, that need to be added, and the result which we get is cash and cash equivalent at the end of the year. So this way we calculate cash flow statement. So this is the way to calculate cash flow statement. We all know cash flow statement plays a very important role in the organization to know the overall inflow and outflow of the cash, to make a optimum balance of cash in the organization. There should not be excess of cash in the organization. If the cash is excess, it will be idle. There is no use of the cash. and there should not be shortage of the cash so that we cannot make payment to our regular suppliers. So this is a very important concept which we have discussed today. Thank you so much.